Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour With AI. Standard Chartered is challenging the prevailing narrative around Bitcoin, questioning Michael Saylor's relentless accumulation strategy as the asset trades at $64,148 with notably neutral sentiment. While institutional giants bet on digital scarcity, traditional banking analysts are urging caution, signaling a potential divergence in market confidence. Meanwhile, the global energy landscape is undergoing a structural shift driven by strategic reserve depletion. New analysis indicates that replenishment efforts could add 500,000 to 750,000 barrels per day to crude demand through 2028. This sustained pressure reshapes global energy markets, particularly as geopolitical tensions continue to constrain supply chains and keep volatility premiums elevated. On the macro front, the United States is witnessing an unprecedented energy war. California's aggressive push for 30.8 gigawatts of clean energy expansion is clashing directly with the Trump administration's fossil fuel initiatives. This policy friction is impacting grid stability and sending shockwaves through S&P 500 energy stocks, forcing investors to price in regulatory uncertainty alongside physical supply constraints. In related news, the Federal Reserve faces a deepening divergence as U.S. home prices hit all-time highs. While housing data suggests persistent inflationary pressure, Fed officials remain split on the trajectory of price stability. This policy uncertainty is creating headwinds for equity markets, where valuation models are struggling to reconcile strong asset prices with ambiguous monetary guidance. Across the Atlantic, the European Central Bank is grappling with its own inflation dilemma. With the Eurozone reading at 2.8% against the ECB's 2% target, rising oil costs are complicating the path to price stability. Key figures like Valdis Dombrovskis and Joachim Nagel are weighing in on Europe's economic resilience, highlighting the delicate balance between growth support and inflation control. Looking ahead to today's release, the economic calendar remains relatively quiet with no major high-impact data points scheduled in the next 36 hours. This absence of fresh catalysts allows markets to digest the complex interplay between crypto skepticism, energy supply constraints, and divergent monetary policies without immediate disruption. Investors are left to navigate these structural shifts in a low-noise environment, where long-term trends outweigh short-term volatility. The convergence of these stories paints a picture of a global economy in transition. From the digital asset class to physical energy reserves, and from U.S. housing markets to European inflation targets, the signals are mixed. Market participants must remain agile, adjusting positions as policy divergences widen and supply dynamics evolve. That's your market briefing. Follow Rumour With AI for daily market intelligence.